Hello everyone, I hope you guys are having a wonderful day as per usual. I'm going to be doing the Friday recap today, just a little bit late. Today was a busy day for me, and we can get right into it right now. So again, the SPY and the SPY, the triple Qs, the IWM, and the Dow Jones had a wonderful day, especially the IWM. So the IWM has now invalidated this bearish setup that we have and is pushing higher in an extended wave 2 and a higher wave C. So right now we're just gonna have to delay all of this, right? This was basically just your wave 3 and it still is inside of wave 3. So we're gonna have to wait just a little bit longer before it finishes out. But again, it could technically end at any moment. The RSI isn't that overbought on the IWM, so that's okay on the daily. The 4-hour it's getting a little bit overdone, and same thing for the 1-hour. But you do have a bearish divergence, so there is that. So again, you're going to be just looking for essentially a wave 4 when this does finish, and then after that you could probably buy the last pullback before maybe a pump up. But again, I wouldn't be buying anything at the moment. And then we'll take a look at the SPY as well, because SPY had a pretty pivotal moment as well today. As you guys can probably tell, the SPY has taken out the July highs. Now there is something interesting about the SPY. So the SPY shows here that it's taken out the July highs from 459.44 all the way to 459.65. So again, regardless of the dollar amount, I know it's only like 20 cents, but it has taken out the July highs. Now the interesting thing is that when you go look at the actual index, the S&P 500 index, it has not taken out the July highs. The July highs are at 4,600, and then you can check the S&P 500 futures. And it's the same thing, 46.34. And then the S&P 500 on November, also 4,600. So again, is there a possibility that this is just a fake out and then we're going to go lower? Yeah, it could. But right now, the probabilities are that, this wants to push higher, right? And the same thing for the Qs, right? You're getting a lot of consolidation here. But the stochastics have already started to roll over. So maybe you're going to get a bit of a dip. But overall, the 4 hours showing it's finished, and you can continue up. So again, don't be shocked if you get a big continuation pump next week, and we don't get any pullbacks. There's just a lot of bullishness in the market. Almost everyone is ready to buy. Lots of buyers. So retail is not willing to give this up just yet, and they want to keep pushing it up on light volume. So again, that's just going to be the name of the game now. IWM. On the daily time frame, pushing higher, showing an extension of possible extension to continue here. So again, we stopped out of our trade. Now we're just going to sit on the sidelines and wait for the next setup. Let's take a look at wave edge. Excuse me. Let me just take a look at wave edge here. So wave edge, nothing too new at the moment. A daily time frame, not showing any signs of stopping. You had a potential short setup with these red crosses, but unfortunately, it didn't end up playing out. Right, and as we've been tracking that bullish pattern as well with the higher lows. Right, it's been making higher lows and retesting the highs, and then eventually it just broke out. Right, but there was a lot of sellers here trying to defend it. Let's take a look at the smaller time frames. 4 hour, nothing there. We did get some selling here, but there could be more on the way. 1 hour, and again, you see all this buying on a 1 hour, and you're not seeing any selling it on the IWM. So that's probably why we're still pushing up. Let's take a look at the SPY now. Looking at the SPY. All right, there we go. So it's showing that it's in the 5th wave now. Excuse me. When we take a look at the other indices, it's showing that this is also in a 5th wave. So again, your target should be right around 4,700 all the way to 596. So I would actually favor this 500 level given what I've outlined here on the bullish setup. But overall, we're going to need a pullback at one point, right? And the people who are going to FOMO in here are the ones who are going to get their shit kicked in. But again, everyone that who has been watching me, I said, like, I'm not longing here yet. I'm just going to wait for the pullback. Have been waiting as well. And now they're saying, oh, we've missed up this entire run, right? We've missed up a 4%, an additional 4% move. And then now they're saying we're going to miss another additional 4% move, which is going to total up to 9, 8, 10%, something like that, right? But again, this is what I see on the charts. You have divergence, and it is continuing, and it is building, and eventually, probably when these people cave in and buy in and FOMO, that's probably when we're gonna get our pullback, right? And then we'll get our retrace, which will turn out to be a buying opportunity, and then we'll go to new all-time highs. But again, I stress that it could end at any moment, right? Could it be finished here? Yeah, it could. The bearish scenario, when we look at the actual index and not the ETF, yeah, it looks like it's still valid. It hasn't taken out its July highs. Once this takes out its July highs, that'll be probably confirmation that there's nothing left for the bears, and then you can only favor the bullish scenario at this point, right? And again, the bullish scenario is not bullish in of it itself, right? You do go to new all-time highs, but you will peak out at 510, 540, and then you'll have a biblical like retrace, right? Because of all the problems in the economy. And that's probably maybe why the consumer isn't ready. You can see the velocity of money is still extremely high. People are buying on credit regardless of whatever their financial situation is. You can take a look at Affirm. Their stock is continuously in an upwards trend. I wouldn't even say it's trend. It's more like a vertical pump because of the idea that everyone is buying up all their goodies for Christmas and stuff like that on credit, and they're going to pay it back later. But they haven't been able to pay it back this entire time when they did have money during COVID, right? Everyone still was flush with cash. They had terrible earnings, right? Their business model was not working, and now for some reason, now that no one has money and is putting it all on credit, it seems to be working. So it's funny how the world works. And it's funny how essentially the world works in stocks and stuff. But let's take a look at the SPY here. So SPY continuous selling. It's been experiencing continuous selling. We saw another big dark bull trade, so we know that big money is still selling into this rally, and they're taking advantage of it. And eventually we're going to get that retrace. So again, SPY, a couple of red crosses here on the 1 hour. 4 hour, nothing new. You could if you really want, you can get on like the tiny. So I actually did play a bit of a trade here. I'll tell you guys on the triple Qs. So we triple Qs daily, nothing much, just a red cross here. A 4 hour, nothing much here either, just some selling from the institutions still. And then the 1 hour, same thing as a SPY. But we did get these green crosses here, right? We got one green cross, and that piqued my interest on the triple Qs, since it's all the big caps and, it's the buy the dip mentality. You could see on the 5 minute, we actually saw a lot of institutions starting to buy up this dip here. And I myself bought at the lows. I bought around 386 with a triple leverage ETF. And then once we went up, 1%, and then I just cashed out, right? It took my profits and I ran. And that's it. Then you can play the intraday like that if you want. It's always nice to get a nice little pop. So if you really need to FOMO in and you just can't sit on the sidelines and you have to buy in, then you could do little intraday trades like this, right? They can work out with wave edge. This is where institutions sell intraday. They sell at the peaks, right? And they buy at the bottoms, right? So it's really nice how it works. So when you see the greens, I would only buy the greens though. I wouldn't really short the reds because, as you can probably tell, they can buy a lot on the way down and they can sell on the way up a lot. And I would only buy when market conditions start to stabilize and the VIX is low, because as you can probably tell, when the VIX is high and shit hits the fan, the market can drop significantly, and you could be buying this entire way down on every single signal, right? So you want to usually do this when market volatility is low and institutions are just bouncing price in a range back and forth, right? So that's just basically a strategy if you're using wave edge. All right, let me take a look here at some individual names. So ROKU looks like it's possibly finished its wave one and should be coming back down now in a 3-wave move, which is a corrective wave, and it's actually doing this perfectly as we've been tracking it this entire time. 1, 2, 3, 4, and then your final wave 5, and then this is in of itself a 5-wave move inside wave 5, and now it should be finished, right? So now that this is finished, actually we could actually draw this wave 3 maybe a little like here, a little bit better. But yeah, now that this 3-wave move is finished, we can finally take a look at where the price could be headed to. Let me just keep those for now. So right now you're going to be looking for an ABC correction. You probably have a lot of gaps in Roku, I think. So maybe your first wave A will come back down and fill this gap. After that, maybe the wave 2 can start to bottom out around this upsloping trend line that I've drawn. I'll just flip it to blue so it can make it easier to see. So essentially this trend line here should finish up for wave 2, and then you can actually take off in wave 3, and this would again fall in line with the bullish scenario. So you can buy the dip probably around $69, something like that. But again, I'll adjust my target as the wave and the count develops. Let's take a look at PayPal. So PayPal right now is in its final wave up in wave 5. So again, this is something that I've been looking at too for wave 3. So right now it's going in a fifth of a fifth. Same thing as Roku. It should come up back into this resistance. Could it just double top and make a nominal high? Yeah, it could do that. And right now you do have divergence. So again, once you push in to 61, maybe 60 bucks, you'll run into some tremendous resistance again, and you'll be met with a lot of sellers, right? And then it should finish. So right now I can maybe count the tiny waves, the sub waves, to see where we're at. So right now maybe you're in your 1, 2, 3, 4, and 5, right? So you're probably gonna finish up in a fifth of a fifth next week into a final pump. But could it go higher than this? Yeah, it could, but I don't think it will. I think this should be finishing up pretty soon, and then you'll come back down. There we go. That's about it. Let's take a look at Apple. So again, this is the thing with the market going higher. The mega caps need to continue pushing the market up. But right now, the mega caps are struggling. They're kind of doing the same thing that what the Qs were doing, consolidating. They are consolidating at the highs. They're just waiting, and right now it looks like Apple's making an attempt to push potentially higher. But again, it's met with tremendous resistance at 192. Microsoft is at an all-time highs right now, so it's running out of gas, right? How much energy are you going to need to push Microsoft to 400, 500, right? You're going to need a lot more capital and a lot more buyers, and who's going to be left holding, right? Who's going to be the people who bought here? Are they really going to hold after this massive move, this 20% move in $1 trillion stock? And looking at Meta, same thing. You ran into this trend line resistance here. You should be done, and then you should be coming back down. In a wave. I think this is essentially an ABC as well. Let me do this. This is also an ABC, and you should be coming back down. Obviously not to negative 44, but you gotta get the picture. So let's just do Tesla as well. So Tesla is coming back up right now. So it looks like it's finished its 5-wave move here. Maybe we counted this one a little bit wrong, and we just have to redraw it. But overall, it should be done here as well and coming back down. So this is the thing: when the mega caps are stalling out like Nvidia and they're coming back down, I question if the market really is going to break out and moon, right? Then it would invalidate everything we've just done in the bearish scenario, like we've just outlined. Has not taken out the July highs on the index, and it is going to come back down, right? So maybe this was a fake out, right? Is this a fake out, or it's gonna be we're gonna find out in a couple of days when the markets reopen. But overall, the markets are very bullish, right? The yields are coming down. Is this risk on? Is this where the markets get risk on and buy up all the garbage companies in the IWM? Or is this going to be, everyone's buying bonds because they want to be risk off and they know a recession's coming? Because why are they lowering the rates? Why are they going to be cutting rates in March, right? Because they obviously haven't won the battle against inflation, right? That's still a tremendous problem, right? Inflation is still very high, and they've stressed that they don't want inflation going to to new out they don't want inflation going up again, so they want to keep rates high, and they wanted to go down to 2%. 2% has been their target. They said they won't let up until 2% is achieved. Now that 2% is is still not achieved, they're going to cut rates, right? So the problems in the economy must be much worse than what they think to cut rates before their target, right? And they're just not telling you guys right now, right? They're gonna announce it later once the market's much higher or something like that, or I don't know what their plan is, but it's not gonna end well. So taking a look at oil as well. So oil could be finished its way for here. A nice little ABC, a correction. So now it should be coming back down in a fifth of a fifth. And this is going to be like your recession signal if oil starts to break back down below 72. With all these geopolitical conditions and oil is still breaking lower, that just shows you that there's going to be demand issues. And then why are there going to be demand issues? Well, that means there's going to be problems in the economy. So once you break 72.9, that's going to be your first sign, or essentially this upsloping trend line. Once you break this, that's going to be your first sign that oil is going to be starting to get a very big correction down to possibly $55 to $45. And again, I've had a long-term price target of there, so that's probably where oil should go. And once we get there, it's going to be again a generational buying opportunity to pick up oil so cheaply at these levels, because once we do get into a recession, they are going to print the dollar into oblivion. And then again, that's going to be a huge commodity cycle. You can already tell gold has made a new all-time high today. Again, this is a historical moment for the gold traders. I myself included, gold investors. This is a milestone. We have reached the 20,000, sorry, not 20,000, the $2,077 level. We made sorry, not on this chart, but on the futures. The futures made a new all-time high. Let me just pull up the gold futures here on the CME. Let me see gold. Let me just look at gold futures. There we go. The COMEX. The COMEX made a new all-time high, baby. It reached $2,095. Wow, we stopped out some shorts. Some people's stop losses were probably here. I mean, like, look at how many times it's hit this resistance, right? Boom, 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 and then now it's making like a little bit of a higher low here. So it's really trying. Could it get a pullback? It could, right? It could, very well could. But again, I'm really enjoying this rally. The gold miners are surely enjoying it, and this could very well run up to the $2,500 levels. And again, this is really bad for the dollar if this happens. And gold going up like this is not a good sign, right? It's not a good sign for the economy as a whole. Right? You don't want gold mooning like this, right? And then the same thing for silver. Silver is starting to run up as well. It's finishing up. It's probably getting into wave 3 or something like that of a multi-cycle high here. I don't know what this yellow line is. What is this yellow line? Oh my goodness. I don't know what this yellow line is. Let me just delete that. I don't think silver is going to 600. So it's probably doing something like this for a super cycle, grand super cycle. Something like that. 1, 2, 3, 4, 5. So you're probably doing a 2 here. And then you're going into your 3. Back on that. Oh no, let's stay on the weekly, and then we'll get back into the 4, and then the final of a 5, right? But the 3 is much higher. The 3 is like up here, and then the 4, and then the 5, right? And then it's gonna do like this is like an ABC correction, right? And then it's just correcting its entire move, and now it's just getting ready to go higher. Just get this up. Right, and now you're just gonna go up, and it's starting. Anyways, that's basically it, guys. I don't really have much to add. You guys can follow up with me inside the Discord, and then I'll continue the analysis as we go forward. Have a wonderful weekend.